Hello, everyone. Good morning or good afternoon, depending on where you are. This is Mohammed Yaoud, and I'm the Chief Markets Analyst at PU Prime. Today is Monday, the beginning of a new trading week, so it's our usual weekly live analysis session. Let's talk about the markets. What are we expecting for this week when it comes to the economic agenda? Do we have any important news that we will be looking at? And when it comes to the technical analysis as well, what are the analysis on the main financial assets? Thank you very much today, everyone, for tuning in. I hope it will be a useful session. As always, please, if you have any questions, leave it in the comment section below, because every time when we finish the session, I find out that there are still some questions that we haven't answered because you send the questions late after or just about before the session ends. So sometimes I don't really get to see them. So please leave the comments or the questions in the comment section below if you have any. And throughout the session, I'll make sure that all of your questions have been answered. So yeah, today is Monday, the 27th of May. And let's have a look on the markets. So when it comes to the economic agenda, basically this week is very boring when it comes to the economic news and agenda. Only Friday will be a very important day. Let's tell you why is that. Okay, so I have a question or I have a comment here that there's no volume or there's no voice. However, I think everyone else can hear me, so I think it might be an individual problem from your end. Please make sure that you connected your hands-free or whatever. Can you please access the pound yen, the pound dollar, and the euro dollar? Of course, we will look at the pound and the euro. However, let's start by having a look first on the economic agenda for Monday, the 27th of May. And yeah, as you can directly see, today will be a very weak day in the markets. We won't have any volume either in London session or in US session, because in London session we'll be having a bank holiday from the United Kingdom and as well as the Memorial Day in the United States. So we will not be having any volume or that much higher volume in London session, and the same as well in the US session. So I'm expecting a very weak day when it comes to volatility. This is something that you should know, because most often than not, when Monday, which is the first day of the week, is a bank holiday, so we don't have higher volume to start the week, this means that Tuesday is the day that we will see markets moving, and we will see like more than double of the volume, because Monday was off, so Tuesday sometimes could be considered as the beginning of the week. So this is something that you should take notice of. So today we are not expecting anything pretty much to happen in the markets. Even the other economic agenda events, there is literally nothing that we would be looking for. Only Williams from the FOMC will be speaking, or the FOMC member Williams. We will be having a speech 15 minutes to 10 in the evening. So even it will be very late to end the day with. So yeah, I don't really expect anything to happen during today's sessions, especially the London session and the US session. Going forward to Tuesday, pretty much the same will happen. We have nothing to look at except for the CV consumer confidence for the month of May. Other than that, if you just have a look quickly, we have speeches from the FOMC, but today or those days, FOMC speeches are not so effective because we are just in the middle between two FOMC meetings. They are important just after a FOMC meeting or just before a FOMC meeting, but you know, having 2 to 3 weeks next FOMC meeting, I don't really believe markets will be responding to those speeches. Let's see how this plays out. Other than that, I don't really see anything that we can focus on. Only the CV consumer confidence. And to me personally, although here it's given like importance 3 out of 3, I usually give it around 4 or 5 out of 10 when it comes to the importance or the volatility expected. So we will be having a look on the CV consumer confidence. I don't really believe it will drive a lot of volatility or risk in the markets. So Monday is a boring day. It's an off day in the markets. Tuesday is pretty much the same. And yes, Wednesday is also the same. Literally nothing that we would be looking at, nothing at all. German CPI is not that important and nothing else that we need to look at. Thursday, sometimes things would get somehow a little bit interesting on Thursday. Why is that? First of all, because it will be almost the end of the month. And second of all, because we will start to have some data that we will be looking at. Uh, we will be looking at the core PCE prices, and this is not the most important one of them. I'll tell you why. We have also the GDP from the US economy. This is the most important thing to look at on Thursday of this week. So we have the GDP on a quarterly basis for Q1 of this year. So the first 3 months GDP will be announced on Thursday. And we have the initial jobless claims, which is the weekly figure that we always look at, of course, along with the crude oil inventories. So Monday, Tuesday, Wednesday, boring days in the markets. Thursday, we will just be waiting for the GDP. Friday is the most important day of all, okay? It's the end of the week and it's also the end of the month. It's the end of the monthly candlestick, the 31st of May. So this is really important. Not only this, but we will also be having both the CPI from the Eurozone, which is the Consumer Price Index, okay, on a yearly and a monthly basis for May. And we will also have the core PCE price index. So PCE stands for the personal consumer expenditures. We have explained previously the CPI, which is the main measure of inflation, but we said it's no longer the main one because we have the PCE. So the PCE will be announced on Friday. This is the main indicator for inflation that the Federal Reserve is looking at during this current period. So we have the PCE, personal consumer expenditures, for April on a monthly basis, on a yearly basis. We have also the same. We have the core and we have the headline PCE price index. So we have 4 indicators in total. The core PCE on a monthly basis, the core PCE on a yearly basis. We have the headline PCE or the basic one on a yearly basis for April, and we also have it on a monthly basis. Those 4 indicators to me are the most important thing that we will be looking at during this week, not only on Friday, but this whole week. It will definitely drive a lot of inflation because it will be announced by the beginning of the last US session during the month. So it's definitely something that we should look at. Do you have any questions so far? No, so good. So yes, we have the GDP for the US economy on Thursday, and on Friday we have the PCE numbers, and that's all what we will be looking at during this week on the economic agenda. Guys, you can leave it in the comment section. People trying to raise their hands. I think we cannot make this an option right now. So instead of raising your hand, you can leave it. If you have any questions, you can leave it in the comments section below or the questions tab. How comes PCE is the main inflation indicator over CPI? It's what the Federal Reserve wants. We have explained before that the CPI used to be the main one, but currently the PCE is the main one at the moment. And even if you listen to Jerome Powell in the speech in the press conference after the FOMC meeting, you will find that they're always mentioning the PCE more than the CPI. It's a lot of explanation to do. We can do it in a separate webinar, but the way how PCE indicator is calculated, they believe reflects more the inflation in the US economy than the CPI at this current moment in the US economy. So they are both important, but at the moment, the PCE to me is more important. And even in the dot plot, if you guys check the statements released after the FOMC meeting, they sometimes every quarter meeting, every 3 months meeting, they publish the dot plot and the economic projections. So they mention the PCE instead of the CPI. So when they track inflation, their projections and their expectations in the near future, they basically look at the PCE, not the CPI. And it's already this week. You can see the volatility that will be driven in the market just because of the PCE. And a prediction for the GBP/USD, let's do it right now. Let's start with the technical analysis. Of course, we have the charts empty again, nothing to look at. Let's see the weekly candle for the previous week. So we mentioned that we reached support. Let me just remove this here. It's 104.30. That was a previous support. The previous week or the one before, we reached the support, and the previous week basically we somehow rebounded from this support. So on the weekly, I'm a little bit bullish to the next resistance, which is around 105.30. That's on the weekly time frame. Let's redefine our supports and resistances here. So the support is 104.10. That's on the daily time frame. And resistance is 105.40, roughly. Yeah, you can see it was a previous support, came back to the support previous week, and we somehow rebounded. This was a resistance. It was previously a support, broken, acted as resistance. So this is the sideways range we are trading in on the US dollar. Okay. What's happening here on the US dollar is a downward push, retracement, another downward push, retracement. So it's a downward trend. So eventually this will end, and I believe that the US dollar will continue moving lower. Okay. If you tell me, okay, but sorry, yeah, we've seen on the weekly time frame, and we have a bullish bias. This previous candle, although it's bullish, it's not so bullish because it didn't really extend beyond the previous high. So yeah, it didn't create a new low, which is good, but it didn't even form a new high. So it's an inside bar or inside candle. We've explained this before. This shows lower volatility, but it is bullish on the weekly, but it's not so bullish because we still didn't form a new high. What it says on the 4-hour time frame, it's a clear downward move, right? Let me explain it more on the daily time frame. So that was what was happening on the daily. Upward move, retracement, upward move, another minor retracement. We failed to break the high. We broke the last low, so that's a break of structure. Then another retracement to test it, another push, retracement, and I believe we will continue moving lower. Even more, do you see this daily candlestick? This is a bearish daily candlestick that was on Friday. So we ended Friday on a bearish candlestick. I believe that, yes, although the dollar index might go up a little bit, at the end of the day, I'm not looking for buys. I'm only looking for sells. I'm looking for shorts on the US dollar. This is a clear retracement. Let me see the Fibonacci retracements here. I know this is getting a little bit confusing here. Let me just remove those levels here. Okay, starting with this last swing, we have already reached 61.80%. So this retracement was 61.80% from this downward swing. Okay, that was the level that we are continuing, probably the move from. When it comes to this swing, the previous one, we haven't yet reached, I think it's 50%. We are currently between 38.20 and 50%, and we're moving lower. Okay, guys, I don't really see that we might be heading higher on the US dollar. I don't see it. I see more of a downward push. We already broke the previous. Let me see this on the 1 hour time frame. Okay. So what is the course of action? Let me tell you. Upward move, retracement, upward move, low, high, low, high. We didn't yet break the structure of this upward move, which is the correction one. So the key thing for me to sell the US dollar is a break below 104.65. Once we break below this whole upward move, which is a correction of the 4 hour downward trend, this will be ending and I'll be targeting more push to the downside. So I hope this is a little bit clear. Yeah, it's a little bit confusing because on the weekly, the bias is somehow bullish. On the daily and the 4 hour, it's bearish. On the 1 hour, we are bearish, but we are just waiting for confirmation. From here, we can see an upward move because this is support. However, my short signal will be active once we break below the 104.65. Today, you can expect anything to happen in the markets, and you can just expect markets to continue moving in a very dull sideways manner because, as we said, today is a bank holiday in the United Kingdom as well as the United States. So we are not expecting a major move. However, we might slightly move higher, just tiny moves to the upside. And tomorrow, when the volume kicks in, we are supposed to continue moving lower. That's what I really see on the dollar. Let's see what's happening here on the euro versus the dollar, because we had a question on the euro dollar. The weekly time frame. Okay. The previous weekly candle was bearish, slightly bearish because it's a lower high, but it's not still a lower low. So it's exactly like what we explained on the US dollar, but on the opposite side. But this is something that we need to note here, because do you see this level, which is the 1.0835? This level was previously a resistance, right? We moved higher, we broke above this level. So the bearish candle for the previous week, maybe it was just a retest for this previously broken resistance, which should now be support to move higher. So although this is bearish, don't get caught thinking that, okay, this is a bearish weekly candle, we should continue lower. No, it might only be a retest of a previously broken resistance, which is now support, and we move higher. So something tells me that the euro is bullish. Okay, so that was the resistance. Moved higher, we broke above resistance, we moved lower, formed support. I see the euro as bullish. And the previous daily candle on Friday was a very good engulfing bullish candlestick. So I think we're moving higher. On the 4-hour time frame, it's exactly the same. Let me tell you why. Move higher, low, high, low, high, low. We should move higher. Okay. This is just a retracement of the previous upward swing, and I think it stopped around the 50% Fibonacci. Exactly 50%. That's great. I think we should move higher. However, what's the entry point for a buy signal? If we see this downward move, let me get it on the 1-hour time frame. It's exactly what we said on the dollar index. So that's a move lower, high, low, high, lower, low. This upward swing, which is the last one, tested this resistance, but we didn't still move higher. We didn't break above it. This is the level when, if broken, I will be buying the euro versus the US dollar. It won't happen maybe tonight or today because of the weak volume. However, eventually, I believe that even if prices move down a little bit during the day, I believe that the level 1.0850, not 50, it's 55, just to be quite accurate. 1.0855 on the euro versus the US dollar is the key level to look at. Once we break above, I'll basically be buying the euro versus the dollar, and I'll be heading for the highs here. 1.0895. We are talking about a roughly 40 pips upward move, exactly like what we said on the dollar index, but it's on the opposite side. Okay. Yeah, this is pretty much it's exactly the same. It's one of those times when what you see on the dollar, you can see exactly the opposite happening on the euro versus the dollar, which is good. Gives you more confidence and confirmation in your analysis. Let's have a look on the pound versus the dollar. The pound is bullish, like 80-90% bullish. Weekly candles are bullish and they are strong. Higher highs and higher lows. Nothing pretty much to say about it. Previous weekly candle was bullish. The nearest resistance is still I think we are way beyond this resistance to go back and retest it. So that was a resistance. We broke higher and we even went lower, rejected those levels before breaking above. So guys, if you're approaching resistance, if prices break this resistance immediately and directly without rejection first, most probably prices will retest it. However, here what happened was the opposite. We approached resistance, we rejected it, gained some bullish momentum, and you can see this strong bullish candle pushing higher. In this case, more often than not, prices will not be heading back for a retest because we already gained momentum and we broke higher. We are free. We shouldn't go back to test those levels. So yeah, basically I'm bullish on the pound versus the dollar. Still a long way to go. So we were heading lower, low, high, low, high, low. We started forming here a high, a higher low, a higher high. So this is a market structure shift. This is how a market shifts from a bearish move to a bullish move. I think the pound is targeting the levels of 1.2853. This also supports my view on the euro, which is bullish. We are just waiting for confirmation. And this also supports my view on the dollar that's bearish, also waiting for some confirmation. Okay, now things are not so good on the 4-hour time frame. Why? Because the pound has been edging higher for some time already, since we broke this resistance and so on, but the momentum seems weak. When momentum is weak, it's not time for you to buy. It's time for you to wait for a retracement and then join the trend. So, I mean, after this move, okay, we had a retracement. We had another move, and we didn't retrace yet. So from here, if you buy, this should be or could be the worst possible entry for a long position. I believe we will be heading lower sometime or during maybe the couple of those days, first 2 3 days for a retracement before heading higher. This means, okay, that the euro will not break through this resistance immediately. I mean, it will eventually break above, but not today, not tomorrow. Maybe we'll move lower, as we already expected, a little bit lower from this resistance to give some time for the pound versus the dollar to retrace a little bit, and then the dollar would start to weaken uh, after rejecting this support a little bit, and then we break. So it's one of the rare cases for me that all of the analysis just agrees with each other. So yeah, I'm bullish on the pound versus the dollar. I'm just waiting for a retracement. The retracement should happen from here, roughly. It's a resistance. 1 2 3 4 times we are not able to move higher. So this means momentum is already showing complete bearish move that we should expect. I believe that the pound first could target the levels of 1.2685 because we have already had 2 equal highs. We might get 2 equal lows, okay, before moving higher and target the main resistance on the 4-hour time frame. Okay. So Richard, here you go. Here's your answer for the pound and the euro versus the dollar. This has been answered. This has also been answered. And let's have a look on gold. So during the previous week, I remember that we said, okay, if we're going to get higher on gold, we must have a correction first because the momentum up here was not so good for me. So we were expecting a move lower. The move lower, to be honest, came higher and even bigger than what I expected because we had some the FOMC meeting minutes. Remember, guys, we spoke about the FOMC meeting minutes during the last week analysis session, and we said that they sometimes surprise the market. So what happened basically in this FOMC meeting minutes is that the Federal Reserve members were discussing raising interest rates. They are no longer discussing cutting interest rates. They were discussing raising interest rates because they are not so happy about the inflation numbers. And that's why the dollar took an upward move during the last week. And gold, we had this downward move. Candle was bearish. Okay, what's happening here? This resistance was an all-time high on gold, just around 2,400, right? We reached those levels, we rejected, we came back again, we broke above, but this was a false breakout. And this is a clear engulfing bearish candlestick. So this is nothing but a textbook definition of a false breakout. When a false breakout happens and prices were trying to move higher or out of a range and it fails, what happens is it comes back to the range again, and most probably it targets the previous support because we are in a range. We have support and resistance. So that was the resistance, and this is the support. We tried to break higher than the resistance. We failed. This means that prices most probably will go back again to the support or to the range and target the lowest levels of it. So we are supposed to target the levels of $2,300 per ounce. Okay. Does this mean we should sell now? No, we shouldn't, because the previous weekly candlestick was a bearish candle, very big bearish candle. This week's candle first must go higher a little bit to form a higher wick, and then move lower. So during the week, I expect that this weekly candle will be bearish, but doesn't mean that we should sell right now. Most probably, guys, if you study candles, I'm talking about the probabilities. When you have this candle, a big candle to the downside or upside, the following candle will form a wick around 50% of the previous one. What does that mean? This means, okay, this is a candle, right? Where's the 50% of this candle? This is the 50% of the previous candle, around $2,380, and also sometimes 38.20. So this is the zone I'm looking at. So during the beginning of this week, we might see that gold will be heading higher a little bit to form an upper wick before moving lower. This is just, based on experience, what I see with candles, because this is what I do. We most often, we don't look at a lot of indicators, nothing. We just look, on the price action. So by studying candles and trading candles for many, many years, I'm telling you, this is somehow what normally happens. Let's see if this will be true on the daily. And yes, the daily, this zone that we have just, mentioned on the weekly, it was a previous resistance, acted as support. We broke below. So most probably what will happen is prices will move higher to retest this level. Also, the daily candlestick for the previous or the last day, which is Friday, is a bullish one. After three great bearish candles, we started to see a small bullish candle. This means that we might be moving a little bit higher. Whereas the next target is to retest the levels of broken support, which should now act as resistance. So the daily so far is with the weekly outlook. Maybe we need to, okay, just remove this and just, plot this line here. So it's 2,375. That's the exact level I'm looking at. Previous resistance acted as support. We broke below. We are starting to build up here. Just a tiny, tiny correction. I believe that we would be heading higher in a corrective manner to target those levels of 2,375, or maybe we can stop at around 2,365. This is also a good level because, yeah, this is somehow we stopped here. So this might be a good level of also resistance. This is what I'm looking at. This is where I'll be selling gold during this week. Okay. And if we check one more time, Fibonacci retracement, this is exactly 38.20%. So anywhere between 38.20% and 50% Fibonacci is where I'll be looking to short gold during this week. On the weekly, it's bearish. We just said that we might to form the higher or the upper wick on the weekly time frame. This also was the outlook on the daily and the 4-hour time. And this is what I'll be looking to see. Someone might say, okay, if we are looking for an upward move, currently prices are 23.42. We are looking at around 40 pips or 30 pips higher. Can we buy or not? Guys, leave it in the comment section. What do you think? Is it a good option right here to buy or not? Anyone would be buying after explaining this scenario on gold? Would you think of buying gold during maybe today or tomorrow for $30, $40 to the upside or not? I'll check the dollar JPY. Okay, I've just got this question. Okay, people are saying yes, I was already in buy. Yes, I would buy as well. Okay, you could buy, but just to be on the same page, it's a higher risk entry. Okay. The better option is always to trade with the trend. The trend here is a downward move, right? So if you're waiting for gold to reach your resistance and to sell, it will be better because you're trading with the trend. I'm not saying that I don't really expect prices of gold to move higher, $30, $40. I'm just saying we are different types of traders, and that's why I wanted you to engage with me. I'm a type of trader, I will not be trading against the trends, especially that the FOMC meeting minutes during the last week mentioned that they are thinking of raising interest rates. This definitely supports the dollar and just, adds more pressure on gold. What happens if any FOMC member during this week, like Williams, I think he will speak tomorrow. What if he reinforces the statement that, yeah, we might be raising interest rates? With all my respect to this resistance, we might never reach it and we might just continue moving lower. So that's why, even if you're technically looking at the market, if you draw up your lines, your charts, and everything, you buy, somehow prices move against you, say, okay, what's happening here? It's happening just because you're trading against the trend. So you are not wrong. I personally believe it will go higher for $30, 300 pips, pretty good move. But I personally would be watching this move happen. Not every move I could trade, I just watch sometimes. I use only small lots. That's great. Yes, small. Yes, exactly. This is good. This is risk managing your risk because you know when it's a higher probability, you're trading with the trend, so you increase your risk or you use your normal. And when your entry is against the uh, smaller amounts. Yeah, I believe we have some good traders here. Could you explain correlation between gold and silver? The only correlation between gold and silver is that they are commodities, okay? So somehow they share the same safe haven nature. However, silver has another nature because silver is more of a manufacturing asset. Silver is used in a lot of industries and manufacturing. So it's more related silver, I mean, not gold. It's related to the economy. If the economy is doing good, sometimes you might see that the silver is going higher and gold is not. Uh, it's quite the same between silver and copper, but copper is also more of a manufacturing asset. But silver, yeah, it's supposed to be same behavior, but silver, will be having more volume. I mean, if gold is moving up with 100 points, you might see silver going up with 150 or 200 points. That's it. And I don't really treat silver that much. Okay. Let's have a look on, let's check silver. Ah, it's the same chart. Moved lower. Yeah, silver, this is exactly what I'm saying, guys. Silver already uh, started the correction. So you can see from the bottom to the high here, it's 2.53%. No, it cannot be measured in percent, but I mean, it's already started to move, whereas gold is still near the correction. Didn't really, oh, gold is pushing higher. $5 in 1 hour. That's good. Okay, guys, we have some people making money here following this session. People are already buying gold. What's happening on US oil? We previously said we have support. This week was bullish. We expected this to turn higher, but it's moving lower and it ended bearish. I think we would be breaking this level. No, it's a false break. Definitely a false break. What's happening here is a textbook definition of moving higher because the momentum is just a bullish divergence. So I'm still bullish on US oil, basically. Although the price action is really terrible here, what's happening is really bad. But this is a rejection of support. It took much, much longer than expected. We have multiple bullish divergences. We have one here. This is a convergence, but this is another divergence. Okay, let's say, without any further complicating the chart, if prices break above 78.21, I'll be looking to buy to 79.90 because it's somehow in a sideways manner. So we had highs, lows, equal highs and lows. This is a false breakout. However, in order to make sure that this is a false breakout, we need a higher high above the 78.20. Closing above 78.20, we will definitely push higher to 79.86. And that's what I really believe will happen on the US oil. Have a look on the Dow Jones. It's brilliant, guys. It's brilliant. We've mentioned that we will be waiting for, I remember this because I traded this move. We mentioned that a break below 39,850, I believe, would be a break of structure. So we had this brilliant move, more than 850 pips on the Dow Jones. Here, we have nothing to say more than just ride the trend, just sell, because as long as we're having this huge momentum to the downside, you can just, sell anywhere you can. Where's the next target? I think this one might be a good target here. Yeah, somehow we lost momentum here on the way up, so down. So we are looking at a further drop of around 180 pips or 200 pips on the Dow Jones lower. That's the Dow Jones. And yeah, let's end this session, guys, with the dollar yen because we had a question on the dollar JPY. We are just about to approach resistance. So it's a clear move. We are heading higher, formed resistance, after which will form support. So we will be definitely retesting the resistance here. On the daily, it is pretty much the same. It's around 100 pips higher. Okay, we are heading higher, but it's not a good option or it's not a good trade to buy right now because look at the momentum. It's dying. So we didn't even have any corrections in this upward move, a minor correction. So the upward move will continue a little bit. However, it's not a good option to buy. Instead, I would like to see the dollar yen go higher, touch this resistance with very poor upward momentum. I will short it, definitely short the dollar JPY for a move lower one more time. Yeah, see, just see the momentum here. It's dying, literally. Bearish divergence, another one, and another one. Right, momentum is just moving lower. Price is moving higher. So I'm expecting another move, and I'll short the dollar JPY from the levels of 157.90. Quick touch on BTC. Of course, let's have a look on BTC. Katarzyna, what do you mean by resolve? Okay. Definitely bullish. 100% bullish. 150% bullish. Guys, Bitcoin will see all-time highs very soon. Why is that? Simply, maybe this would be better to see on the monthly. Okay, for the monthly, look what happened. This was an all-time high, moved lower, moved higher again, broke above, retested, boom. We are heading higher. On the weekly time frame, because we have more details, so what's happening here is we already had this all-time high. We broke higher, retested, formed support. I think I'm gonna buy Bitcoin. Formed support, and when we form support, okay, if this was a false breakout, if this was a false breakout, we could have seen Bitcoin moving back lower. But this didn't happen. Okay, guys, this is exactly what I'm talking about. This one. So that was an all-time high back then. Prices moved higher. We tried to break. It was a false breakout, so we moved lower. Exactly. That's a V reversal of a fake breakout. Okay? It was a fake breakout. We moved lower. We didn't form any support on the way down because it's a false breakout. This is not the situation here. Instead of doing the same, instead of moving higher, forming a V reversal and moving lower for a false breakout, no, prices are moving higher or moved higher. We are forming support. So there is bullish momentum. There is some buying. It's not a false breakout. We are definitely moving higher. It's one of the few times you will see me say that, yeah, I'm 90%. I'm never 100% sure because I've been in the markets long enough to know that you can never be 100% sure. But what you see happening once before, or two times, or three times, or 10 times, you are pretty much sure that, okay, this might happen one more time. So I'm 100% bullish on Bitcoin. And yeah, let's talk about trade management. If I want to trade here on Bitcoin, should I buy right now? No, it would be another very bad entry because you still have resistance here. You still have resistance that the price has rejected during the last week. Okay, guys, this is a weekly time frame. So let's see the daily. It's still a sideways range on the daily. So it's pretty much very simple. Wait for this resistance, which is 72,855. Is it 73,000? Yeah, 73,000. I'll just be waiting for a break, a clear break, confirmation, and maybe probably a retest of the $73,000 on Bitcoin, and we are heading way higher, way higher. Um, first target, not say, because investment banks, they say 100,000, 150,000, they are just numbers. But what's on the charts here technically is that we had a huge upward move, a brilliant one, a very brief correction. This is a clear textbook definition of a flag pattern, a correctional flag pattern here. In this case, the target is to measure exactly the previous upward move and to extend it upwards. When or where does this takes us? A little bit above $100,000. Wow. Wow. That's good. That's really good. You know what? Even if you buy right now, it might be a bad entry, but it will still give you a decent risk to reward. Wow, that's very good. Because the stop loss should be definitely before the last low for the correction. And yeah, prices will not be moving higher, but it might be doing like this till it reaches the 100,000. That's really good. Thank you. Thank you for mentioning to me Bitcoin. Okay, guys. I think that's all for today, is it? If you have any other questions, you have 30 seconds to leave your questions in the comment section. Thank you. Thank you very much, Mahmoud, Richard, and Ron. It's always a pleasure, guys, to be with you. Very good engagement, very good, participant counts. And yeah, it always makes me happy to be here with you. So thank you very much for attending this session. And I'll see you guys next week, same time on Monday. Thank you very much. Please stay safe and trade with a stop loss. Thank you. Bye-bye.